This is Mary Ellen McGonagle. I am the founder of MEM Investment Research, and today we are going to be talking about how you can profit from pullbacks in powerful stocks. So I'll take a minute here and give a little bit of background. I do have quite a bit of experience on Wall Street, over 30 years. I started out as a portfolio manager in New York City. And from there, I moved out to the West Coast to join William O'Neill and Company. And he was the founder, of course, of Investors Business Daily. I worked with top fund managers throughout the world, teaching them the O'Neill methodology. So my focus is all about stocks that go on to far outpace the broader markets. And I have been the author of the MEM Edge Report for 8 years now. I currently am being a part of Simpler Trading. I'm the senior managing director there. And then I do host a weekly show on stockcharts.com. I urge you to be sure and catch that. It is all about capturing that strength in the markets and getting you in front of those big winners. So today, let's take a look at what I'm going to be sharing with you. And everything is very tried and true, tested over many, many years. And it is based on a lot of Bill O'Neill's studies that go back over 100 years. So today we're going to be talking a little bit about how you can locate what I call the best candidates. These are going to be areas of the market that are exhibiting superior outperformance. And then within that, you want to be able to capture that top stock. And then also those precise entry points as the stock takes off. And that's going to be today about pullbacks. So we have these big winners. They're not going to continue to go on and hit new highs endlessly. There will be a pullback period, whether it's sideways or dip in price. And then I'll share with you how you can use those pullbacks as an entry point. There are going to be, of course, some technical indicators that are going to be critical as far as helping you to guide you and then make sure. Ideally, you need to make sure that that pullback is just that it's not a move into a downtrend. So you always do, of course, want to protect your assets, protect your profits. And then stocks that are recovering from that pullback are going to be ideal candidates. Again, if they are those, it doesn't have to be a top performer. That is an area that I focus on as a way to really outperform the broader markets. And then, as always, my work is going to be about using history as a guide, and that's going to be relating to not only the broader markets, but each stock. Oftentimes, you may notice that a stock that you own has what I call a personality, where it'll have a key area that it will pull back to before resuming its uptrend. So let's go ahead and start here at what I call the beginning. And I will begin by, again, talking about those stocks that overall will advance the most over a particular time period. Certainly now we're in a unique period with AI-related tech and high growth names on the move higher. And then, of course, timing your entry. Today it's going to be all about that pullback and then how long you should stay with that stock. Again, that pullback, you'll be able to tell if it's more than that and if you need to exit the stock. All of this is what we will be discussing today. So let's talk about some of those keys and the key ways that you can uncover what I call top candidates in the markets. And let's see if we can. So first up, you do want to make sure that your stock is in an industry group that's outperforming. And by that, I mean, oftentimes we do have the 11 sectors in the broader market, but there are those sub-industry groupings within those sectors. It's one thing to know that technology is faring well, but precisely where. And that industry group affiliation for your stock is going to account for, on average, 33% of your stock's movement to the upside or downside. So you want to make sure you get that right. I'll share with you a way that I do that. And then also that stock does have strong recent performance. In other words, it has that upside momentum behind it, the wind behind the sails, so to speak. And then the stock's been doing well for a sound reason. And by that, I mean it has strong growth prospects. Perhaps it just entered into a new large contract. Analysts are revising their price targets higher, or they've just come in with good earnings. But you need that driver to really help propel that stock higher. And then making sure institutions are also involved in that stock. These are the big money guys, and their vote for that stock is going to be really what propels it higher. So in essence, I'll share with you how you can keep on top of volume characteristics, and certainly higher volume will often indicate that institutions are in there either buying or selling. And then last up, economic backdrop supports a continued move higher. That's going to be all about making sure that the economy is in a growth phase. We did just come off of the most recent earnings quarter, and we had a very strong period of corporate earnings coming in well above estimates, well above average, likewise with sales. So we do have that backdrop in the markets. Of course, the critical backdrop and potential roadblock now is interest rates, and we'll get into that as we move through. But as always, making sure that you're in a strong market that has a reason for being strong. So as far as pinpointing entry and exit points, when stocks have these surges, they trend higher, they will pull back to key moving averages. And I'll share with you those moving averages that I use that are really quite powerful in helping keep you in front of that pullback. Also, volume as the stock moves away from that pullback. This is an ideal scenario. That volume is going to indicate that, again, investors are interested, the stock is under accumulation, and again, giving that stock more juice to trade higher. And then oftentimes when stocks emerge out of a pullback, they will form what's called the right side of a base. If you're familiar with O'Neill's work, or really it has become much more common outside of his work, this concept of these stocks forming bases, cup formations, and then breaking out. And we'll get into that with the many examples that I have here today. And then that exit strategy, and this is when that pullback becomes more, where it drops below key support. That key support is going to be identified as a key moving average. And most definitely, if your stock is falling while the broader markets are trending higher, or while the industry group that that stock is in is also continuing to trend higher, that's when you really want to sit up and take a closer look. Oftentimes it means that there's been some sort of news relative to your stock that you want to be aware of, but as always, that chart is going to be your key guide. So making sure that the broader markets are in an uptrend, and I'm sharing with you a current chart, actually maybe from yesterday, but we are certainly still at new highs here with the broader markets. And you can see that the uptrend is very firmly in place. I use metrics here to determine the health also by using an RSI. That's a relative strength indicator. You can see it's trending upward. It's above that net neutral 50. And then a MACD, a moving average, convergence, divergence, also heading northward and then above that net neutral. And then also the S&P is above that 10-day simple moving average. So net, you want to have that ability to get the temperature and make sure that these broader markets are still in your favor. Now, as far as identifying pullbacks relative to the health of the broader markets, you really want to have a system there. So what I'm sharing with you is the NASDAQ composite, and in really want to pay attention to this period at the end of last year. This is August, and then that late September into October period, and then again in late October. So these particular pullbacks were identified by this RSI. This is the NASDAQ composite. When that RSI breaks below 50, it's not a common occurrence, particularly well, it is for stocks, but not for broader market indices. So you want to sit up when you see that take place. Also, with this period here with the NASDAQ, we did get a break below that key 50-day simple moving average, and then that MACD, that moving average convergence divergence, got down there below 50. And then you can see we had these brief rallies, and then that same momentum shift with the RSI and MACD down into negative territory. And as you can see, the difference here, this is taking us to the beginning of this year, we did see that RSI dip below this net neutral at the very beginning of the year. Some of you may remember it. I remember it well because it really did hit those mega magnificent 7 names the most. However, this MACD remained in positive territory. So as subscribers to my MEM Edge report, we held our positions during this pullback and actually used it as a buying opportunity. Let's see if I want to make sure. And then as we move forward a little bit more here, this is a more recent pullback in April. And you can see that dynamic with the RSI and the NASDAQ breaking back below that 50-day, and then again that MACD. So at this point in time, just being unclear about where we may or may not lead going forward. At this time, I did suggest lightening up on positions until we regained that uptrend. Once we break key support at that 50, it gets very, very difficult to determine when we may see the markets regain that upside momentum. So oftentimes you're well served to lighten up with an eye toward getting back in once the markets regain their uptrend. So I talked about being able to uncover where the strength is and industry group, how critical that is to being able to get in front of the biggest winners. And what you're looking at here, and I hope you can see it, it might be a little bit small, but it's a 2-month price chart, and it's a daily price chart of ETFs in the broader markets. And ETFs are a fantastic way of staying on top of where the group movement is. And this particular list of these 12 ETFs is sorted by relative strength. So this is a current view of the markets. At this point in time, we have the NASDAQ front and center as the strongest. And then as we move through on that upper left, these are your stronger subgroups. And then down in this lower right quartile are the weaker areas of the market. So front and center, semiconductors, we're going to get into a couple of names there. Biotechs are up in the forefront, performing quite well. I have a couple of names there on my MEM Edge report that are really outperforming the broader markets by quite a wide margin. IGV are software stocks. You can see they're popping today with that drop in interest rates. I have retailers up here. So these are more in the middling area of the markets. And then your weaker areas. We did see a very nice pop today in home builders, XHB, because of interest rates. And I'm going to share with you a name in that grouping as well. And then energy, oil prices, and banks down here. But this is something from stockcharts.com that you can very easily set up and look at on a very regular basis and remain on top of where that relative strength is. So here we are with a view of tech, of course, up here at the forefront. It is one of the top performers. You can see this XLK chart, very constructive looking. RSI, MACD, both in positive territory. So from here, let's go ahead and talked about using history as your guide and having a sense for the market. So interest rates are really going to impact technology stocks. Quite simply, higher interest rates are not good for tech names. So I very simply here have the interest rates, and then overlaid is tech, just to highlight that fact that as interest rates increase, oftentimes we will see a big drop in tech. So you want to be aware of that. Of course, today's drop in interest rates quite constructive for these tech names. And then as we move through, again, using history as our guide, let's go ahead back. I shared with you that NASDAQ pullback, but we did have a very pronounced, sharp downtrend reversal last November in the broader markets, certainly the NASDAQ and these growth stocks. And this was very, very much took place after the Federal Reserve's FOMC meeting. They're having one today, and there was an implication that rates could be cut, and that's all the markets needed to hear. So we can see from, we're talking today about pullbacks. This is what a pullback or downtrend reversal looks like with the semiconductor group. SOXX gets back above that 50-day simple moving average, and then we get those nice positive momentum indicators. So from here, most of the names I'll be sharing with you today are picks from my MEM Edge report at various times. So going back to that fall period, we added AMD, Advanced Micro. That's following that group chart with semiconductors. And take a look. This is that downtrend reversal move where it moves back above these shorter term moving averages. We get a positive RSI moving up into positive territory, and then that nice positive MACD reversal into positive territory. So from here, make sure I have this in order. Yes, so I did want to talk about that pullback and that concept. So we had this gap up into a nice uptrend and then a pullback to that 21-day simple moving average as long as your momentum remains positive. That RSI in positive territory, the MACD still up here. Those pullbacks can be used as buying opportunities. And then if we move through into February, bit of a tough period here for semis, but net we were able to remain in positive territory. So this is another pullback period, also known as a flat base formation. We did have one more push to new highs, and then as we move through and take a look further at this chart, this is where you need to have that exit plan. So with Advanced Micro AMD, we did have that RSI turn into negative territory. This MACD crossover was your early signal, and then as this shifts downward, it's telling you that that uptrend has reversed. And then once that MACD gets into negative territory and you marry that with a break below that 50-day, if you have not already taken profits, this is your absolute sell signal. So again, pull back on the uptrend and then have a good plan as far as knowing when that pullback is more than a pullback. So here we are with NVIDIA. And I wanted to highlight this stock going back historically because during that November period into the end of the year, NVIDIA sat out that whole period. And I tell you, I woke up every day waiting. I knew the day would come, and it did at the very beginning of January. So here is that pullback period for NVIDIA on the daily chart and the signals that it was entering a new uptrend. And that was the stock very decisively moved above this 10-day moving average. Take a look. I've highlighted that volume. That's institutions and lots of investors coming in. And then we had that bullish MACD crossover, black line up through the red. We did add NVIDIA back to our suggested holdings list on this day. And then as we move through, we did lighten up. We advised long-term investors stay with the stock, but if you were shorter term, here's that break below that 50-day. So just out of prudence, lighten up knowing that you can get back in. And we did add it back. We were out for about a week. Long-term investors stayed with it. And then we got that nice re-entry from that pullback. And also going back to that November period, we did have software stocks really on the move higher. So I talked about that group movement and the importance of making sure that you're in that right group. So here we are with that advance in software and that pullback downtrend reversal. From here, I did want to share with you a particular name back in the fall that we added to our buy list. This is service now, and this is that base breakout concept. And as the stock broke out of a base, we got that nice positive momentum shift. We did add NOW to the buy list, and then pullbacks to this 5-day simple moving average. That is your pullback buy point once a stock really begins to take off. I should check on my timing. There's okay, because I do not want to miss sharing with you a couple of ideas in today's market. So here we are with a pullback in NOW that took place. This is that pullback at the beginning of the year, but we did find support above that 50-day. You can stay with the stock. The MACD remained in positive territory, so that's a pullback that you can stay with. But as we move forward, it gets awfully sloppy. We did remove NOW here in March as that RSI turned negative, and you can see that momentum shift into negative territory. So from here, let's go ahead and take a look at another software stock that came to life last fall. This is Salesforce CRM, and this is another name that experienced this nice gap up into a base breakout after reporting strong earnings and sales. Again, that pullback that took place in the broader markets, but your momentum indicators still remained positive. So you could stay with CRM, but as we advance April, now this was a very tough period for the broader markets, and we had that sell signal with CRM with the close below the RSI below 50, and then that MACD trending lower. Super high volume. If you did not exit at this point, for sure, this was the more pronounced sell signal. So that was indicating it was more than just a pullback. So I talked about housing stocks, another big mover coming out of this downtrend reversal last fall. We did add MHO, that's MI Homes, on this reversal. Lots of good reasons why. One is a move back above these moving averages, super high volume here, so that you can see that buyers are coming in, and then that momentum shift into positive territory. So let's talk about pullbacks. For this stock, their pullbacks took place in the form of a flat base formation, this back and fill period as the stock digested this sharp advance. And then again, a gap up. And here is that pullback period. So as it relates to buying on these pullbacks, it will be the breakout above that base formation, this flat base. So this bar would be your buy point. And then again, this bar. Now, if you were on it, you could get in earlier in the day, and then you can see the stock advances beyond that. Now, into February, we did remove the stock as that momentum shifted into negative territory, and it broke below that 50-day simple moving average. And then moving through, taking a look at MHO today, lower interest rates are pushing housing stocks quite a bit higher. The group's up about 3.5% today. But let's take a look at this potential downtrend reversal here. We're not getting that volume. We're also not getting that big shift, that MACD shift that we saw last fall. And then, yes, the RSI is positive, but it's not with real momentum. So at this point in time, I would not consider putting it back on our buy list. There are other candidates that are exhibiting much more in the way of upside momentum. And then Wingstop, another big winner for us out of last fall. And here we are with that flat base. It could be called a pullback, just a period of consolidation, and then that move out of that base, super high volume. And we did put the stock on at that point in time, and we're able to take advantage of this significant advance. Now, we did remove the stock. I still own it. I advised long-term investors to stay with it through this period because it is a stock that you can see even here more recently, that momentum shifting into positive territory. And let's see if we can move through here. Chipotle, another stock that is certainly well known here, and talking about pullbacks. So into the beginning of this year, Chipotle did pull back all the way to its 50-day simple moving average. So upon a pullback of that nature, your buy point coming out of that pullback is going to be once the stock closes back above that 10-day simple moving average. And then you want to combine that with a move of the RSI into positive territory, trending higher. And then likewise, we ultimately did have that MACD crossover, and that is an ideal buy point with these big winners that go on to greater heights. And then from here, we're taking a look at semiconductor stocks and the fact that we did have this sharp pullback. This was all about interest rates, and it impacted pretty much the broader markets as well, more impactful to growth stocks. So you do want to be aware of that. And what we can see here is that semiconductors have recovered really quite nicely. And I'm pointing this out to you because this industry group is one of the top performers here. And I'm going to, from here, go ahead and share with you a couple of names that are looking really interesting right now outside of NVIDIA. We're all aware, of course, that NVIDIA is on the move higher. So here we are with MPWR, monolithic power, and just highlighting this pullback that took place in line with the broader markets and what that reversal looked like, a move above those moving averages, get those momentum indicators into positive territory. And then we had this more modest pullback just to that 21-day, but we can see that your momentum indicators remained in positive territory. So this did, in fact, was an ideal re-entry, or if you wanted to add to your position. A couple of other factors, the stock posted these bullish candle formations here, but it is a stock that is looking quite compelling here at this time. And then taking a look at Vertex, this is a name that, again, my MEMH report, we've been in and out of this stock. Coming back to this period in December, this was a gap up on news. So here's that consolidation or pullback phase. The stock did go on to advance, and then you can see this move back below these 50-day simple moving average with the negative momentum indicators. This was your early signal. So you had two different periods. If you did not exit upon this initial warning, certainly your exit is there. And then moving through, we did add Vertex back to our buy list with this move back above these moving averages, and then also with that positive momentum shift with the RSI trending upward into positive territory, likewise with that move on that MACD as well. And Dave, I thought I would check on my timing, make sure I'm not overstepping here. This is a stock that I did want to share with you because it just recently experienced a pullback, and it is looking quite interesting here with this finding support at this 50-day. It's Constellation Energy, CEG. It has everything to do with energy requirements for data centers. And we can see this pullback to this 50-day, and then it has advanced back above this 21-day simple moving average. So it's a really interesting stock at this point. I will want to get that MACD crossover as confirmation that a new uptrend has begun. But if we're looking at pullbacks, this could be a very, very interesting potential opportunity. Another name here is Abercrombie & Fitch, and has been a real big winner. When you're looking for names that you want to take advantage of their superior outperformance, often these leaders will pull back, whether it's in line with the markets here with ANF or for other reasons, keep them on your radar. This was a big winner November into March. It experienced this pullback. So when you're looking for that re-entry, you're going to want to key in on the stock moving back above this 21-day simple moving average with that RSI turning positive, likewise with that MACD entering into positive territory as well. And as we move through, when your stock really begins to take off, you can see that MACD, the momentum shifting into high gear. Pullbacks to that 5-day simple moving average are going to be an ideal buy point. So so we can see as this stock had this significant gap up on earnings, when you have this type of a big move, oftentimes the stock will pull back to that 21-day simple moving average and then continue to advance higher. And taking a look here, I did also want to highlight a couple of other items of note. This is Iron Mountain IRM. It is a REIT stock, but it is very much AI related. So you can see their growth. So what I'm pointing out to you here is this base breakout that faltered, pulled back here. This is with that rise in interest rate, REIT stocks pulled back. So when a stock regains that prior base breakout, oftentimes that's an ideal buy point. You're getting that super high volume here. And then we have that nice MACD black line up through the red, that nice crossover there, indicating that a new uptrend has in fact come into play. And a couple of other areas here. Oftentimes, if you have stocks on your radar, they pulled back significantly and they begin to reverse. This pullback and potential downtrend reversal is not healthy quite yet. Two things: you don't have that RSI up here in positive territory, and then also it's still below this downward trending 50-day simple moving average. So it still has work to do. MACD has not gotten into positive territory. You can keep it on your radar, but when you are looking to enter into stocks that pull back, you want to make sure that those momentum characteristics and signals are there, and then also that it's above, in particular, that 50-day simple moving average. And taking a look here at being aware of those broader markets, this is Dover, DOV, another big winner into the beginning or certainly the mid part of May, and it has since pulled back. This is a very orderly pullback, and the reason we're seeing a pullback in Dover, quite simply, is that overall it's part of the industrial group, and we're seeing cyclical names pull back, and that's because we received economic data last week. Construction spending is down, and other factors that would potentially reduce the growth for this stock. So if you're looking on at this pullback, we did have a recovery here. You are going to want to pay attention to those economic data points to make sure that this stock would have that ability to reverse from that pullback and trend higher. So here's that XLI. The overall industry group is currently a bit under pressure here, again, because we did get manufacturing data and construction data that was lower. This is another one for your watch list. Modine, a big winner going into mid-March. So if we get a move back into those economically sensitive areas, this would be one to keep an eye on after its pullback. And again, signs that it's more than a pullback. This is ALV, a bit of a smaller company, but again, when you get that break, you get that negative RSI, that MACD crossover. Take a look at that high volume. That's indicating distribution, and you can see the stock has now broken below key support here at that 50-day simple moving average. So certainly it's more than a pullback. This was an orderly pullback that the stock recovered from. When you get these big, heavy breaks, high volume, that's telling you distribution, and it's going to be a bit more than a pullback. And Meta Platforms has come to life a bit this week and into the end of last week. So this is that drop in response to their earnings investors were not impressed. So we've had this lengthy period of go nowhere. And if you're looking for after a stock pulls back, this was a pretty sharp pullback. It is now in recovery mode. META, we have nice uplift here on that RSI, that MACD in positive territory, and we've broken above that 50-day simple moving average. And then another name for your radar. This is Arista Networks, ANET, and another AI component in the sense that they provide data storage, data servers. And we did experience a pullback here into the beginning of June. Now, more recently, the stock has broken back above that 21-day simple moving average. We do have a positive RSI, so I'm on the lookout for that MACD to have a nice positive crossover to confirm this new uptrend. And see if I have one more name here. And Home Depot, and this is just after today, that reduction in interest rates. We're seeing a pop in these building related stocks, and Home Depot is one of them. It's now back above this 50-day simple moving average, that RSI trending upward. And then we can see that MACD is also had that nice positive crossover. So ideally from here, I want to see, well, we did get that close above the 50, but I do want that RSI to get into positive territory to confirm this downtrend reversal, and then also keep a close eye on where the stock closes on the day. We want to see it close in the upper reaches here of its trading range. Of course, we are due to get FOMC notes at any moment if we haven't already, and that could impact interest rates and hence Home Depot, but it is certainly on my radar. So from here, let's take a look at how you can screen for candidates in the markets. I'm all about those winners. And then from here, we can take a look at as far as some of the ways that you can screen now that we are into the third quarter here, and you can screen ideally for names that have been up 20% or more. These are your winning names. They're up for a reason. They have strong growth prospects. And then you can, from here, go ahead and check, is their current price off their recent high? You're looking for that pullback, and you can easily screen for that. I tend to traffic in higher market cap and more liquid names. So then from there, if we have seen that pullback, make sure that RSI is positive, make sure the price is above that 50-day moving average, particularly if it's well off its highs. We looked at Home Depot that broke back above that 50. And then ideally, as the price moves back above that 10-day, if you're getting those other momentum indicators are showing up as positive. So from here, I did want to share with you my MEM Edge report, and it is a twice weekly report, and it reviews where the broader markets are. I go over each of those sectors that are in bullish territory, why they are, and the hand-picked stocks within each of those areas. And then also I identify precise buy points where you can add to positions, and also a lot by way of what to be on the lookout for going into the next week. So it comes out twice a week. That Sunday report is it's about 8 to 12 pages, but it is a quick read as far as staying on top of those markets. There are a number of charts in there, and then that midweek report on Wednesday is going to really just cut to the chase. Here's what's moving. Here's where you can capture that move. Here are buy points for those specific names, and here's what to be on the lookout for as the week progresses. So I hope you'll take advantage of today's offer. You can have this report delivered directly to you for 4 weeks. Actually, the price is $127 now, but for $7, and there should be a link there. The advantages of this report, I certainly have quite a bit as far as experience, have been through many market cycles, and again, those entry and exit points are identified in the report, and I have certainly gotten quite a bit by way of positive feedback for this report. Very educational, informative. I get feedback pretty much every day from subscribers as far as their use of the report and how powerful it has been in helping them.